Hey everybody, this is Jim at SP500chart.com. It's about 4:20 on March 24th, 2014, and we're going to take a look at the S&P 500. Interesting chart. We had some weakness today, obviously, and a little surprising just how weak. So we got a few things to take a look at. And before we do that, I want to remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Starting out here on a 30-minute chart, I think really we can kind of sum this up pretty basically. I was very surprised to see this line right here break. Not that it has a very rich history or anything like that. I just didn't think it would. I thought with these two nice moves off of it back on the 17th and again late in the day on the 19th, it looked to me like we would likely bounce on getting down to that line. We did not. Now the question is, and I think it's a legitimate question, with only two touches on that, do we leave this line on the chart and say that should now be resistance? I don't really want to get rid of it, but I'm going to make it a very, very light color. If we'd had three touches and then this had broken, then I would think this definitely should have turned into resistance. But with what we saw back here and there, let me make it one shade darker. we'll split the difference here. Make it a little easier to see. As far as anything good that happened, well, we bounced right at our little fuzzy zone here. And I say it's a fuzzy zone because we don't really have a perfect lineup of peaks and valleys that go into this line. So therefore, it's a little bit more of a range. And we did bounce at 1850 today and closed up, a little bit over that line, roughly 0.4% over 1850, which is nothing to write home about. So, as I look at this chart, I have to ask myself two things. A, will this continue to hold? B, will this turn into resistance? This is still the level to get over. This to me is still the key. This line right up here at about 1884. As it sits now, if we look at just this portion of the chart, the case could be made that it is critical for 1840, 1850 to hold, because if it were to break, then we would be looking at some form of a topping pattern here that would project a downward target. I'm ballparking it here because, again, our neckline isn't perfect, but I would ballpark this somewhere in the 1790s to 1800s as a minimum downside target if these various areas of support break right here. And let me show you where these are again, just to make sure you know what I'm talking about. Not only do we have this little fuzzy area, but we've got an intersection of a number of support lines right here, right around centered. The epicenter is right around 1840. So, guys, that's all I can say. Let's see if this holds, if we encounter more weakness. But right now, either 1840, if it breaks, then I would think we're going to shed 40 to 50 points as a minimum target. However, if 1884 breaks, then I think that should set up a continuation move from our inverted and truncated head and shoulders pattern right here that points to about 1958. So this really could at this point go either way. You can see this fuzzy area right here that I talked about. That has served as pretty good support. But the problem is it keeps getting tested. I would much rather see a move above this, one move down, a little firming up, and then we bounce off of that. But instead, no, we keep coming down to test that level. So guys, I really, if you can look at what took place over the past 2 days, and you could maybe say that we see a little sign possibly of some strength late in the day by getting over this little trend line here. But a bear would counter that by saying, no, what you got here is you're just making a little bear flag. And you know something? Either one of these outlooks right now, as far as a chart feature goes, either one of these is it's almost a toss-up. The only thing that I think favors the bullish move, that this may be a bottom, is the simple fact that that we've come down to an area where we would expect support because we've seen it before, and we also have come down to an area that used to present a real problem with its resistance. So because of that, let's see if this is the bottom potentially for the week. Again, the way I see it, 1884 gets taken out, then we start that move up over 1900. 1840 gets taken out, then we start the move down probably to a little under 1800 as a minimum target. So guys, we're sort of in the what's the word I'm looking for, in the Midlands. Is that a word I'm looking? I don't know. We're sort of in the in-between area. Okay, so we're about halfway between support and resistance. The question is, which way are we going to go? Are we going to go try to break down through support again, or are we going to make another trip up and see what we can do with resistance? Frankly, I think it's anybody's guess at this point. Finally, there's just one more thing I want to show you, because a lot of the weakness, particularly in the NASDAQ, has been in the biotechnology sector, and I've felt that very personally because I've got some fairly large biotechnology positions. Let's take a real quick look at IBB. If you look at just the past couple of days here with the NASDAQ Biotechnology Index Fund, you can see that it's gone from 260 down to an intraday low today of about 233. That's shedding 27 points. That's more than 10% in IBB over the past. Actually, all of that took place in less than a day and a half. Now, if we back out on this and take a look at a longer term chart, you can see that there may be a reason to expect at least some kind of bounce here, because we have 1, 2, 3, 4, 5, I guess call that 6, 7 touches now on this support line. And I tell you, the main thing that kind of concerns me just a little bit about IBB is the fact that all of this has sort of taken place in a pattern where if we draw a parallel line, we seem to have kind of blown out over the top of this resistance line in late February. I don't really like that, but I think there's a decent chance that this line could hold, creating a bounce. And if that's the case, that should reverberate, particularly through the NASDAQ, but also through the S&P. I just thought I'd throw that your way as a potential catalyst, maybe, for us to get up and retry this area up here. What's kind of interesting too is since we are not any lower than this than the lows set in mid-March, this could be, you know, another inverted head and shoulders pattern. It's just that we've been so used to seeing them with a fairly, you know, with a well-formed left shoulder, a well-formed head, then a shallow right shoulder. It's a little bit of a shock to see this fairly steep move take place over the past 2 sessions. So guys, there's your video for March 24th, 2014. Let's see what happens tomorrow. It's bound to be interesting. Thanks for watching. Take care.